The price of gold extended yesterday's jump to one-week highs overnight Tuesday, peaking at $1,865 per troy ounce, before losing $10 in London trade after the largest gold ETF investment funds shrank yet again despite the sudden violence and worsening tensions in the Middle East. Global stock markets rose, reaching two-week highs on the MSCI World Index, even as terrorist group Hamas again threatened to attack civilians in southern Israel after killing 1,000 people and kidnapping at least 100 others on Saturday. Israel, in response, continued today to bomb Gaza, where the Ministry of Health says 765 Palestinians have died since the weekend, with 4,000 injured. "We kiss the hands of those who planned the attack on the Zionist regime," said the militant Islamist leadership of Iran today, but it denied any involvement in Hamas's atrocities. Money has flowed into safe haven assets, including gold, London Free Sheet City AM quotes one retail stockbroker's spokesperson. Yet both of the world's largest gold-backed ETF trust funds shrank Monday, with the GLD losing another 0.5% in size as the IAU dropped 0.1% on net selling by shareholders. Now 1.3% and 0.8% smaller already this month so far, both the GLD and IAU gold ETFs had also shrunk yet again across September, with gold ETFs as a whole worldwide shedding the most bullion in 12 months, according to data compiled and published today by the mining industry's World Gold Council. Much of early Monday's overnight spikes in traditional war proxies oil and gold did not extend much into the U.S. session, says a strategy note from Swiss bullion refiners and finance group MKS PAMP. Both markets tend to have short-lived responses to renewed geopolitical risks, but developments are still very fluid and at the margin escalating. Oil today steadied around $88 per barrel of Brent crude, some $5 higher from last week's 5-week low, but over 8% beneath late September's 10-month peak. From $150 oil to no impact at all, says a headline at MarketWatch about the Hamas-Israel war, trying, in its own words, to map out all the possibilities from Saturday's surprise attack. Like the size of gold ETFs, the GLD and IAU, trading volume in COMEX gold futures and options also retreated as gold prices rose to one-week highs yesterday, down by 1/8 from Friday, as the U.S. bond market stayed shut for a public holiday. U.S. Treasury bond prices today rose sharply as the market reopened, briefly pushing the yield offered to new buyers of two-year debt down to 4.90%, the lowest in a month, before rising back above 5%. That level, some 0.15 percentage points beneath last Tuesday's fresh multi-year peak, was the highest since June 2007, eve of the global financial crisis, when reached in March this year. Those falling interest rates today saw the dollar drop to its cheapest against the rest of the world's major currencies so far in October, down 1.5% from last Tuesday's 11-month high. If long-term interest rates remain elevated, said Dallas Fed President Lori Logan, a voting member of the U.S. Central Bank's Policy Committee, until 2024 in a speech Monday, there may be less need to raise the Fed funds rate. However, to the extent that strength in the economy is behind the increase in long-term interest rates, the FOMC may need to do more. "I will remain cognizant of the tightening in financial conditions through higher bond yields," said Philip Jefferson, vice chair of the Fed's Board of Governors and a voting member until 2027, speaking at the same business event in Texas. "We have to balance the risk of not having tightened enough against the risk of policy being too restrictive." Fewer than 1 in 5 bets on November's Fed decision now see the U.S. Central Bank raising its target for overnight dollar interest rates, down from more than 1 in 4 a week ago, and almost 1 in 2 this time last month, according to Derivatives, Exchange the CME's FedWatch tool. Betting on next spring's Fed decisions, meantime foresees a cut in June, if not May, with the consensus outlook for mid-2024's effective Fed funds rate, currently at 5.33% per annum, dropping from 5.30% to 5.15% over the last week. The UK gold price in pounds per ounce today peaked at £1,523 before dropping back to £1,515, while euro gold prices fell €10 from a new one-week high at euro 1763. Priced in the dollar, silver prices meanwhile rose, but failed to retouch yesterday's one-week peak above $22 per troy ounce before dropping back 25 cents. Silver prices in Shanghai traded more than 10.6% above that level, continuing to suggest very strong demand versus supply in China. The incentive for gold imports to China edged back in contrast, but held at historically high levels of 3.0%, equal to $55 per ounce, as Shanghai's yuan price fell to the cheapest since end June, beneath 449 yuan per gram. Please like this video and subscribe to our channel.